Welcome back, or if you're new here, thank you very much for stopping by on my channel. My name is Marcus Auerbach. I am a local real estate agent with Keller Williams here in the greater Milwaukee area, and it's time for a July 2020 real estate market update. So I study a lot of data in order to stay on top of the real estate market and see what's going on. And there is one piece of information that really shocked me. This is from a national lender, and they conducted a survey and found that 87% of home sellers are concerned their home won't sell because of the pandemic and the resulting economic recession. The irony in that is that last month alone, we had 372,000 homes sold in the US. If you want to break it down to the Milwaukee area, we had 2,756 single-family homes sold last month. So that made me wonder, where is that disparity coming from? Why are people so worried that the real estate market is not good? And if you follow the news, or if you look on social media, there's a lot of gloom and doom information out there, and quite a bit of negative clickbait on social media about housing crash and whatnot. So I would like to take a look into that and show you a little bit more data so you can really understand what's going on in the Milwaukee market. So, this here on a high level seems to support the idea. You see a lot of red numbers here. And we have here the data from June versus June of last year. And you can see in the metro area, homes just listed in June are down by 13%. Now, if you follow my videos, you remember that the numbers in April and May were a lot worse than this. So we're trending in a better direction here. But still, we're behind last year in terms of new inventory coming on the market. Homes for sale down 12%. So this is the total pool of inventory that buyers can choose from, about 5,300 single families. And then homes sold is down by 10% as well. So the homes sold is a result of the low inventory. So the fewer homes we list, the fewer homes are coming on the market, the fewer homes are selling, and the higher the competition is. And to get a sense for the level of competition, we'll take a look here at the Wisconsin buyer activity. So showing time allows us to very, very accurately track how many showings are being done every week, or every day actually. And we have two curves here. We have as a reference 2019 here in blue, and in gold you can see the 2020 weekly average. And you can see here in March we went into lockdown, and buyer activity slowed down significantly and was down for about 2 weeks. And then buyers became restless and it started creeping up. And here in May, we actually exceeded the levels from 2019. And we've been over 2019 levels ever since. Very interesting, the 4th of July weekend. Hope you had a couple days off as well. The 4th of July weekend, of course, every year is a dip. But we maintained, a much higher level on buyer activity than we had in the previous year. So now the question becomes, what's going on with the sellers? And this is where the problem is. So here you can see new listings per week. So this is Milwaukee metro area, and this is how many single family homes come on the market every week. And you can see that, since spring, this has been basically more or less the same. And usually we see this curve going up here. And we are still too low on inventory. There's still too many sellers that are not comfortable putting the home on the market, or they're just worried it may not sell. So they're actually contributing to the housing shortage by not putting their house on the market. So we've seen some improvement here in June with numbers going up. Then we're dipping here again. Hopefully the next weeks we will see more sellers taking advantage of the market situation and putting their homes on the market. When you look at it on a national level, you can see here we have a seller traffic index. So there's a lot of gray on this map. So we have very weak or weak seller traffic across the U.S. We have a couple states that are doing better, and here in the southern Midwest, we're doing a little bit better, but for the most part, there's a lot of gray here. And this is in stark contrast to when you look at the buyer traffic index. So you can see here blue is strong buyer traffic, and Wisconsin is really one of the top states here. We're doing very well. If you look who's on the bottom end, it may not surprise you. New York, Florida, California. I think Texas will show up here in gray next month as well. So, that should not really come as a surprise. But Wisconsin is very strong. And it's just very interesting when you look at the difference between what sellers are doing, because they're thinking the market is, not very good, and what's actually going on the buyer's side. So here we have accepted offers per week. And so what is an accepted offer? A home is on the market. A buyer comes, takes a look at it, writes an offer, seller accepts it. That constitutes an accepted offer. The home is sold. It has not closed yet, but it is under contract. And you can see that we have been steadily improving since March, with a few dips here. But basically every week has gotten better than the previous one, setting a new record here with almost 700 here last week. And this is the same data, but in a percentage of inventory. And this really points out how accentuated the inventory shortage is, because we sold in 1 week 12% of the existing inventory. So you do this 4 weeks in a row, you have 48% of the inventory sold in 4 weeks. So this is a hyper fast market. The market is really very, very hot. There is just no other way of putting this. And of course, this has a result on pricing. I have here the Milwaukee Metro Area sales prices. Again, this is just single family data straight out of MLS. And you can see here where we have been in July of last year. We were in a median for the metro area, somewhere between 220 and 230. And now in June, we were at 240. So we have seen an increase of 6.6% over the last, well, technically that's 11 months. So, July is probably going to end up a little bit higher here. So this number might correct itself to 7 or 8%, I would assume. We will see next month. So pricing has definitely been pushed up, and this is, almost every good home that's on the market ends up being a competitive bidding situation, and buyers are pushing up the prices. You have here the typical winter low, so between November and February, prices are usually a little bit lower. That's leftover inventory from last summer, but then you can see here in March, April, despite what was going on with the pandemic, prices jumped right up here, and we're now 6.6% over. So here's an interesting breakdown to understand the velocity of the market. So when you look on MLS today as a buyer, and you look on the MLS, you will see that 65% of the inventory that is out there is under contract. They have an accepted offer. Only 35% of the inventory is currently for sale. Now, when you break this down, and I usually download a big data set out of MLS and crunch that, when you download this, you can see that from all these offers that got accepted, most of them got accepted on day 1 to day 3, and almost as many on day 4 to day 10. So these are the first 2 weekends. And if the home hasn't sold in the first 2 weekends, it was either not presented well or overpriced, and the market responds to that, because you can see after that it goes very, very, very flat. And this is the remaining inventory that is for sale. So now the question becomes, how much are people actually paying for properties? And this is my favorite chart here, because there's so much information on here, and such a valuable information, both for buyers and for sellers. Let me walk you through here quickly. So this is 2020 Milwaukee County, $200,000 to $300,000 price range. And this is list price versus sold price on an axis that shows you days on market. So this is how many days a property has been on the market. This is 1 month, this is 2 months. And this is how much buyers have paid over, or how much buyers have paid under what the seller was asking. And what you can see here is that a lot of offers that are coming in the first few days are significantly over asking price. Buyers always ask me, yeah, we like this home, we'd like to make an offer. We understand the market is very competitive. We're seeing it all the time. We've lost a few properties. How much do you think we need to offer? And the answer is here in this chart, because you can see what people have been offering on a $200,000 to $300,000 home in Milwaukee. So between $5,000 and $10,000 over asking is very, very typical. As time is progressing, you can see, once you go past 3 weeks, there's a lot more dots here on the negative side. So this is when people actually start bargaining. If a house hasn't sold in the first 3 weeks, it is usually overpriced for what it is, or poorly marketed. But at that point, offers are coming in $10,000, $20,000 below asking price. So if you see a listing that's been on the market for a while, now you have room to negotiate, but not on the first 2 weekends. An issue that we are recently running into is appraisals, because buyers are willing, quite a few times to significantly offer over asking price, $20,000 to $40,000 over asking price. And the higher you go over asking price, the more likely it is that there is going to be an issue with the appraisal later. So the bank is going to send out an appraiser to confirm the value of the home and to make sure that you're not, as a buyer, you're not paying more than the home is actual worth, because the bank needs that home as collateral if the loan ever goes bad. If you stop paying your mortgage, they take the house from you. So they want to make sure that you're not paying too much and they're not paying too much for the home. So that's kind of a built-in protection for buyers. But the problem often is that the buyer and the seller don't find out about the result of the appraisal until about oftentimes a week before closing. So it's very late in the process, usually 30 to 45 days from accepted offer to closing. And in the last week or two, you find out that the appraisal is short. And then, the question is, what do we do now? Do we change the price down to the appraisal? Is the buyer bringing in more money? Are we meeting halfway? So appraisals are becoming an issue because prices are taking off so steeply in Milwaukee that in some cases we have seen that becoming an issue. All right, next let's take a look here at interest rates. We have really good news here. 30-year fixed rate mortgages from Freddie Mac here are down to an absolute record low. This is data from last week, 3.13 on a 30-year fixed now. This week we are actually even lower. So interest rates are providing a lot of incentive for buyers, and they're adding a lot of purchasing power to the buyers. So you can afford a much bigger home, a much more expensive home, with a lower payment because the interest rate is so low. So that's actually helping the market quite a bit, and it's putting additional gasoline on that fire. And I found an interesting chart here that I'd like to share with you. So what does a 3% interest rate actually mean for buyers? And I'd like to take you back through the decades here. So we are today, this is from this week, we are at 3.03. And if you take out a $300,000 loan, that will cost you about $1,270. And if you go back here in time, 20 years ago, we were at 6.29. So the same loan would have cost you $1,855. And if you would go back into the 90s, 2,267. And of course, in the 80s, we had super high interest rates. I think they peaked out at 16 or 17%. But look at that difference, $3,250 almost compared to $1,270. So that is the power of interest rates. This is why interest rates are so important for the real estate market. It really helps the buyers a lot. And yes, prices have gone up over the last years, but with rates coming down, the cost to the buyer hasn't really gone up that much. Let's take a look at the economy and unemployment rates. So really great news in the midst of all this. The economy has gained 4.8 million jobs. That is a million more than we had expected in June. So 4.8 million expected was about 3.8. And we have here a breakdown of employment gains by sector. And this should not come as a surprise. Of course, leisure and hospitality has gained 2.1 million. Retail has gained about 750,000. And then you can see the breakdown of the rest here. So this is a lot of these temporary layoffs where people have called back to work. And this is, of course, what's helping with the unemployment rate and what's helping with the economy. But I'd like to break that down a little bit further. So just as a reminder, we have here the unemployment rate from before COVID hit us, then it jumped up to almost 15%, and now we keep coming down, currently at 11.1%. But you can break this down further because there's a portion of these people here that are temporarily laid off, and then there's a portion that are permanently laid off. And the permanently laid off, we call it the core unemployment rate, and the core unemployment rate is still rising. So these are people that are not going to be called back to work, and this is something that we will have to carefully monitor, because this is something that is not good news, because that's actually really a drag on the economy. In comparison, and just to put things in proportion, this is from April 2010. We had a core unemployment rate of 10.5. So, does this make it better? Yeah, it certainly looks a little bit better in comparison, but it's still something that we want to keep an eye on in terms of future outlook and seeing what's coming next. So here we have a little bit of a survey of home price projections for 2021 and 2022. And we have a number of very credible institutions here. And this is their best guess or their modeling for the entire US. And the grain of salt that you have to take this forecast with is that this is including both the East Coast and the West Coast. And we're seeing a lot of pressure on ultra high-end real estate on both coasts, stuff that is in the 2 million and up range, which, quite frankly, in San Francisco, for example, a 2 million house is not all that spectacular. And if you're, downtown New York, it's the same thing. So that's, rather, modest living there. But there's a lot of pressure there because people are moving out of these urban areas or looking to move out. So that brings down overall the average. This is the reason why I personally think that in the Midwest, we will see numbers that are better than this. I'm quite bullish for Milwaukee because of the supply and demand situation that we just looked at. And I think that we are going to see higher appreciation numbers for the Milwaukee market than we're going to see on the national average. So Milwaukee, I think, will be doing fairly well here in comparison. Some of the things that have changed, I just mentioned it, is that rural and suburban properties are getting a lot more attention than urban properties. And there's other surveys out there that are suggesting that a lot of people are thinking to move out of town by the end of the year. They're, for example, looking to move out of a condo and move into the suburbs. That's one of the trends that we're currently seeing in the marketplace. The other trend that I'm seeing is that for obvious reasons, home offices are becoming a lot more popular. People are valuing a finished basement a lot more, especially if they have kids, having that additional recreational space downstairs, maybe having even a home gym, having a large backyard. All these things that we have actually gone away in the early 2000s and 2010s are now starting to come back a little bit because, the change in lifestyle. If you have a family, both parents are working from home. So all of a sudden now, ideally, you have 3 bedrooms for everybody to sleep and you have 2 home offices for both parents to work from home. So there is a little bit of a shift in terms of what type of real estate is in style, and we're seeing larger homes coming back. So that's actually quite a benefit for a lot of homeowners here in Mequon, where I live, or in Cedarburg, or in Ozaukee County in general. We have a lot of larger homes. Another thing to keep an eye on is distressed property sales. So I put this up here because there's a lot of like YouTube videos out there, social media stuff that says, oh my God, real estate market is crashing, foreclosures are coming. So here you have the actual foreclosure rate. Actually, this is foreclosures and short sales combined. We lump them together under distressed property sales, and we are currently at 3%. Milwaukee used to be in the 40%, 45% range back about 10 years ago after the real estate bubble crash and the mortgage crash. And now we're down to 3%. So there's almost no foreclosures or short sales on the market. And if you're looking for a deal, a foreclosure is most likely not going to be a good deal. They're getting way too much attention. They're usually in really bad shape. And I would say it doesn't make that much sense at the moment to specifically shop for foreclosures. So we'll keep an eye on that. In terms of what we're going to see in the future with foreclosures, because you have to keep in mind foreclosures take about 12 to 18 months in Wisconsin from the time property owner gets in financial distress until the property actually hits the market. It's a year to 2 years almost lag before you see that property pop up on the marketplace as an REO, as a foreclosure. So I think that we will see foreclosures go up in the next year, 2021, 2022, we will see more. But I think a good portion of those will be luxury homes. So that would be for Milwaukee, anything over 500,000, for Ozaukee County over 650, 700,000. There is a lot of stimulus money and unemployment money that went to homeowners in the entry level and mid-range price ranges. But on the top, in the luxury market, you have certain homeowners that are hit really hard by the pandemic. They might be business owners. They might own a retail store or shopping mall and really struggling with retail. They might be a restaurant owner, et cetera, et cetera. So those are segments that have been hit really hard and are going to be slow to come back. And this is why I'm thinking we might see foreclosures actually on the top end, on the luxury segment of the market. Finally, let's take a look at a forecast. And don't worry, I'm not going to bore you with all those numbers. I just want you to understand that we are monitoring lagging indicators. So all these are lagging indicators. That is measuring performance from last month, understanding what, the data, looking at the data from last month. And we also have leading indicators. The leading indicators allow me to take an educated guess of what's going to happen in the next month in real estate. And so here's my outlook for August 2020 on a very high level. The market is going to remain hot. For Milwaukee, we are not going to see the usual summer slump. Usually in past years, the market slows down second half of July, early August. It's slower. And then, as we're approaching the school year, it starts picking back up again. We are not going to see that this year. We're on a very high velocity, very fast paced. And I think we will just power through this summer. There's not going to be a slowdown. The market feels right now very much like it usually does mid-spring. I'm expecting inventory to go up slightly, as we have seen in the last weeks. The trend will continue. More and more sellers will start to realize the opportunity that they have right now. Confidence is coming back slowly. And they're seeing that homes are selling very, very quickly, and they're selling for absolute top dollar. So that is going to result in more inventory. On the other hand, on the buyer side, we are seeing lower rates, lower interest rates, which gives buyers more purchase power and is an incentive for people to buy a home, get out of renting. Millennials are becoming the biggest group of home buyers right now. So they're entering the marketplace. So low rates and a combination of a slowly increasing confidence in the marketplace is going to stimulate higher demand. Improvements on the unemployment rate are also helping with this. So whatever we're seeing in increases in inventory, we're also going to see an increase in demand. So for that reason, I expect the market to remain very, very tough for buyers. We're going to continue to see tough competition, and many properties are going to sell very quickly and competitively with multiple offers. So that's going to basically remain as it is, but as a result, sales volume overall will increase. So the numbers that you've seen at the very beginning, I expect those to go up. We are going to see a higher volume of overall sales happening in the Milwaukee market. So that's my outlook. We will see next month what the actual numbers come in. Thank you very much for watching my video and taking the time. I will post another video next month here, and if you don't want to miss it, you may want to hit the subscribe button. Also on this channel, I'm posting on a regular basis tips and tricks for homeowners, for buyers, and for sellers. So if you're watching this on Facebook or on another medium, check out my YouTube channel, and I'll see you soon.